Feeling a little nostalgic, Scott. The granddaddy of gold ETFs turns 20 today. The Spider Gold Shares, or GLD as it's called, went public at the NYSE on November 18, 2004. And for the first time, gold could be owned and traded intraday just like a stock. It was the first commodity ETF, and it revolutionized gold investing. Today, it is the largest gold ETF in the world, $75 billion in assets. To understand how revolutionary this was, take a look at a clip from the very first day of trading 20 years ago.
Normally, I talk about the stock market. Today, we're going to talk about something totally different. I'm going to talk about this. This is gold. This is a gold bullion bar here. It's 25 pounds. It's worth about $180,000, and I've got 3 of them here, along with a lot smaller amounts of gold, as well as these 2 burly guards I've been married to for the last half hour. Thank you, guys. Why am I talking about gold today? Because finally, a gold ETF is available. Today, for the first time, thanks to the World Gold Council and State Street, you are able to buy gold just like it's a stock.
And let's talk with the founder of GLD. George Milling Stanley was with the World Gold Council when it went and launched the GLD in 2004. He's now Chief Gold Strategy with State Street Global Advisors, and he runs the GLD. George, you showed the path for a new way to own commodities. This revolutionized everything. GLD and gold was just at an historic high. Tell us how the gold ETF changed the investor base for gold. What did this do for gold investing?
Yeah, look, 20 years ago when we launched GLD, investment was about 10% of final end user demand, with jewelry a full 80%. That's now changed. Jewelry's down to about 50%, maybe even less. And investment has gone up from about 10% to 25, 30, sometimes even as much as 45%. So it's been revolutionary from that point of view.
And central bank investing is now a major part. It wasn't 20 years ago. Why are central banks buying gold so much?
I think they have they're way overexposed to dollar-denominated debt in their official reserves, with still more than about 2/3 of that, and they still have less than 5% on average in gold. And I think that's a balance that they're trying to redress. They think that's a dangerous imbalance.
And jewelry is still 50% of gold demand. So India and China, they're the biggest investors, right? They own gold as part of their household net worth. How is that business doing? Are they still strong there?
Oh, yeah, they're doing very well. India just reduced tariffs in the last budget, and also reduced capital gains tax on gold, and that has been going like an express train. China was going very, very strong in the early part of the year. Then it tailed off a little during the summer. But the stimulus measures that the government has taken, I think, are going to bring prosperity back, and that will help jewelry there, too.
So the investor base is expanding through the ETFs. Central banks, there's still strong demand in India, in China out there. I think that's really important at this point here. So gold's hit a rough patch recently. New high going into the election. It's sold off about 15% since then. What's happening with this?
I think that a lot of investors went gung-ho for risk, and I think that was really the deal. And gold, as you know, is the ultimate risk-off asset. So I think that's why it came down. But it's already started to claw back some of the ground that it lost, and I think looking good going into the end of the year and for next year, too.
Yeah, it's very clear that the gold ETFs help expand the investor base. That we can see. But inflows into Bitcoin ETFs have been huge this year. I'm just curious, is Bitcoin really a kind of a competition for gold? How do you view it?
I don't think so. I think of gold mainly as a protective asset, offering you protection against equity weakness, against inflation, against currency weakness. Bitcoin and the other crypto products out there are all about return. And I think that's really the issue. Returns have been pretty good, except for 2022 when they weren't so good. But returns have been pretty good, and I think that's why they're doing well right now.
Yet flows have slowed down in the last month or two into gold as the Bitcoin ETFs have rallied back rather dramatically. That is competition, right?
I guess. I mean, I don't think it's direct competition. I think they do totally different jobs.
Okay, we're going to have a lot more coming up with George on the tailwinds and the headwinds for gold, and that might be facing in 2025. George is going to be joined by Todd Sohn, ETF strategist at Strategist. That's etfedge.cnbc.com. And of course, we'll be talking about this for the next 20 years because gold's not going away, Scott, as you know quite well.
All right, Bob, thank you.